Hello, everybody. Welcome to Street Smart Investing. I'm Albert, and today I am doing the next 5 stocks on the list. I actually made a video a few days ago, but I had to delete it because in the last video there was already 2 stocks that I already mentioned in the one before that. So basically, I'm redoing this video, and I have the proper setup now, and I have the proper stocks that I'm gonna review. So the next 5 that I have here, let me zoom in so you guys can see this a little bit better. Okay, so I have GDOT, NCBS, MLVF, CPSS, and HIFS. So let's begin. Let's do GDOT. So let's do that. Again, I'm going to be using Webull. Thank you, everybody, for Google knows. Thank you, everybody, for coming to the channel. If you're viewing this for the first time, this is to help you gain knowledge, to learn, and to navigate through the markets. Again, I do recommendations based on the evaluations that I have. Again, if you're going to take a big risk in the stock market, please consult a professional, especially if you're going to spend thousands and thousands of dollars on shares. So I know what it's like to win and to lose. I'm sure that's everybody's fair share. You know, not every time you invest, it's always going to be a good time. So again, everybody's risk tolerance is different, and everybody who has a reward, it becomes different. You know, everybody's reward is different. So let's look at Green Dot. Again, I'm doing the banking services sector. So this is going to be a really long year for me. I think it's going to take maybe a few months. I'd say maybe, well, at the rate I'm going, if I'm doing 5 videos, I don't even know, but it's going to take a few months for this sector for me to close it out. So I need to just keep up with it and try to do maybe 2-3 videos in a week, so that way I can knock it out faster. So anyways, let me begin with this. So we have GDOT at $2.5 billion company. The PE is kind of insane, over 2,000. That don't make any sense. That's probably because it's growing lately at a fast rate. But anyhow, we have the earnings per share at 2. They're not paying a dividend. So let's look at the chart. Let me change this chart real quick. Take this off. Look at the chart. Line chart. Here we go. Let's look at the 1 year. Sorry, that was my day trading stuff that I did on a previous video a few days ago. So the 1 year chart, it looks like it's on a downtrend. But from the 5 year, yeah, I mean, it's on a downtrend. Let's look at these. Order flow, not that good. Financial status. They lost net income, revenues grew. Profitability, return. Debt 75, not too bad. So they are not paying. So they do consumer lending, actually. So that's totally different from banking services. But supposedly, I have this company in the banking services, so that's a secondary sector. So That's what it is. They beat, miss. So net income has dropped. 2020, they gained a lot of their assets. I think in a few years, maybe next year, this company would be very interesting. And I rarely say that. I think out of all the sectors and videos that I've done within the past year and a half, I don't think I've ever mentioned a stock where their revenue and their net income has grown so fast, but then also their debt is not that high, and then on top of that, their cash flow seems pretty good. And the reason I say for next year is because 2020 was a rough year, and 2021, half of this year was a recovery year. So next year is going to be very, very interesting, because I want to see if their net income actually grows past their 2016 levels. But definitely I want to see if it surpasses the 2020 levels, which it should. So I would hold. I mean, even though it's on a downtrend, that company still looks interesting. Next up, I have NCBS. So let's do that. NCBS. So again, this video is going to be 15 minutes or less. So I'm going to do this as fast as I can. 1 year trend. Looks okay. The 5 year, yeah, it looks okay. So it is growing the past 5 years. Looks pretty good. Yeah, looks pretty good. So, there haven't been any downgrades. It is on an uptrend. Short interest, that's very important. It has been, well, for the year, it's gotten higher, but the days to cover, it's starting to go low again. So this company, they're pretty good at earning. I don't have any numbers. Let's look at 2020 numbers. So good. That is high like always. They're a bank. Let's look at the financials real quick. Wow, they just completely blew out their earnings here. Third quarter, then they're beating them by a lot. Sorry, let me focus on that like that. Net margin, that. Looks good. Revenue looks good. Everything looks good. So the numbers look good. would say put on the watch list. Definitely on the watch list. Next up, MLVF. They're on a downtrend, but an uptrend for the year. I will wait this out. Earnings, they're okay. It's pretty flat since March. Short interest has gone down, which is definitely a good thing. Definitely a good thing. Their numbers have gone down year over year, but they're still positive in earnings and net and revenue. What is their market cap? That's what I'm wondering, because the numbers are so low. This is a company definitely has the potential to grow, because it's almost like they're starting from scratch again. They have no short interest, which is good. I would definitely put this on the watch list. Maybe even start investing in this one. That one looks like a good growth company, actually. Next up, I have CPSS. CP. Consumer report. Oh, that's too cheap. I don't know. I do not know. Short interest. Okay. Looks pretty flat. I'm glad there's not a lot of interest. Let's look at the 2020 numbers. They have a lot of debt. I don't know if this is accurate, but 13% is not bad. Net income has gone up, revenue has gone down. Yeah, they're not paying a dividend either, but yeah, I was looking at that. It's weird. They're consumer lending. Yeah, the PE is pretty low. PE is really, really low. They haven't beaten estimates. That's why the returns on equity is high. What are their margins? Not too bad. Yeah, next up. Yeah, I don't have enough time. Last but not least, HIFS. Whoa, they're expensive. That's a good company, but they are very, very expensive. Too expensive. Yeah. They are very expensive. They also a special dividend.